Nigeria's largest brewing company, Nigerian Breweries, posted a quarterly profit that hit a 74-year high. Let's take a look at some of the results there. Revenue, 30% growth, 137 billion naira year on year compared to the first quarter of 2021. Gross profit was up by 57%, 62.5 billion. Profit before tax, 80% growth. Profit after tax, 76.6% growth for Nigerian Breweries. Take a look at the sister company, Champions Breweries. They're also reporting first quarter results. Again, these are unaudited financials. 3.3 billion naira there, 43% growth. Gross profit also double digits, 1.2 billion for Champions Breweries year on year. Profit before tax, 786 million naira. Profit after tax, 554. Joining us to talk breweries, Ayodeji Ajilore, who is an investment research analyst with ARM Securities. Ayo, you're very welcome. Good morning to you. Thanks for joining us.
Thank you for having me.
Let's talk breweries. What were the triggers for Nigerian Breweries' performance?
Basically, yesterday when the financials was released, that's the first thing every analyst will search for.
Yeah.
And then on further evaluation of the financials, what we found is the fact that there might have been a price increase, right? So to substantiate that position, right, I did a little bit of deep dive, especially into the Nigerian inflation figures, and to see what the beverage segments and the alcoholic beverage segment particularly did.
Yeah. And so, go ahead. How did it do?
So overall, what we saw was the fact that price actually rose within that segment from January to March at a very significant level. Not particularly very, very significant, but at a level that is enough, right, to actually engender contribution to overall profitability.
Interesting. And I thought that the players in the sector are hesitant to raise prices too significantly because there's going to be customers will respond with their wallets and probably not buy as much. But it looks like they were able to sneak that in. People still bought the drinks.
Pretty much. It is more like, for me, I would say it's about business continuity planning. I mean, when there are extreme measures, extreme conditions, right, there's usually the need for extreme measures to curtail whatsoever effect that would have on the going concern of the business. And I think raising prices in Q1 2022 was a good thing to do, seeing as we have always clamored for the need to either improve volume or improve price. However, seeing that cost of sales trails rise in volume, right, price might just be the best bet, particularly to actually augment the reality that we're seeing, the macroeconomic realities that have actually led to a significant rise, continual rise in their cost of production.
I love how you used augmented reality, since there's so much tech talk around that nowadays. But within the context of breweries, you mentioned costs. How did they manage their costs for the first quarter?
Yeah, for the cost of input particularly, right? We are still expecting the juries, I would like to put it that way.
Okay.
The management to give their presentation and then, of course, guide us on what actually it is. But our early observation of circumstances around it and what we are getting to hear from the feelers within the industry, it's actually a peculiar time now, especially in the global commodities market. And then, of course, how that we come back to sorghum and barley prices, amongst other things. So what we are feeling, or what we are getting from feelers within the industry, is that these people are, in one way or the other, getting to engage their suppliers more, suppliers of material, and then so engaging them in the sense of perhaps getting the best price possible within that space.
So negotiations then?
Yeah, negotiation, yeah.
Okay, okay. Anyway, Champions Breweries, I know that they're sister company to MBO. Just a general sense on how you saw, because they saw double-digit margins growth as well for their Q1.
Yeah, the story is quite the same.
Yeah.
One thing is sure, although there's a kind of wall between the two firms, any transaction they are actually coming out amongst themselves is a related party transaction in the grand scheme of things.
Okay.
Right? So, but there is lessons to take from each other, being sister companies within a group.
Yeah.
And if there is anything, is the fact that although we must note that margin did not significantly improve on their path, there is the place of perhaps other cost line, let me say expense line, particularly being managed more effectively. And like it was the case with Nigerian Breweries, where we had finance cost. There is, I'm looking at it from two angles now.
Yeah.
There is the finance cost, actual finance cost that I would like to mention, and then there's the impact of foreign exchange concerns on on that line item, particularly as they reported it. Of course, they didn't provide breakdown on what it is that led to that foreign exchange losses, right? But one thing that stood out was the fact that I think they were able to leverage the interest rate environment, particularly in Q1, right, to finance their working capital position. If you look at it closely, you will see that in their balance sheet, or let me say statement of financial position, right, in this case, there was a bit of surge, right, in the loans and borrowing for Q1 2022. And then when you see surge, ordinarily, you would expect that some things happen. I think it's a way, short-term kind of funding like that usually attracts low interest. And then you will see that they actually drag down, to some extent, their long-term borrowing. So overall, right, it seemed like a business that is being properly managed as it is today. And then one other very important factor that I like to look at when I look at these firms is how they are able to sweat their assets. Right?
So basically get more from the assets over time.
The assets. So one of the factors and one of the metric that I use is to look at the firm's revenue to total asset in this case. And then one thing that I saw that is quite important that I think investors also might want to look at is the fact that it has kept a trend of improvement since Q1 2021.
That's the ratio of revenue to assets?
To total assets.
To total assets, okay.
So now, I actually am looking at it and I saw about 0.86 times of total asset being revenue for Q1 2021. And then to the full year, I saw about 0.96, 0.95 times.
So growth.
And then as of Q1 2020, so I saw about 1.05 times.
That's a jump.
That's a significant jump. And if a business is able to continue to pivot this course, and then of course, like they want to do later in the year, we know that they actually stated in their financials that they will be looking to invest further, right? We are looking at a case whereby they will be able to improve volume, right? And then seeing that they try the pricing thing.
And it works.
And it works. Yeah, there's an avenue for them to keep riding that lock. And then, is it luck really?
It's strategy, right? It's strategy. It worked out. I love it. I love it. Okay, overall, the brewery sector, how do you see it managing, I guess, the economic headwinds and so on?
For the past 3 years, if you ask me. Of course, we had the extreme circumstances necessitated by the coronavirus incident. One thing that stood out for me is the fact that they have actually come down on cost. What we have been looking for is an opportunity, particularly for revenue to improve. Right? And in this case, right, what we've seen is that for Guinness, we saw what happened as of H1, and then we expect something like that to continue. Seeing that kind of check I did on the inflation figures and how I think price increase within the brewery sector has contributed to overall food index rise that we saw in March. I think there is this legroom, particularly for the likes of Guinness, for the likes of MB, for the likes of international breweries. Don't forget also, in the market since about 2 or 3 trading days ago, we've seen renewed interest in international breweries. And that has been moving the price steady upward, not at such a significant level that it will catch attention, but we've seen some kind of trajectory like that. So overall, right, talking about their performances, right, I expect that there will be improvement this year, right? But like I have always said, right, there is one that is leading, right? There is one that is following, and there is one that is coming. And that one that is coming, really, it's currently showing some signs of a firm that is seriously going to do some beat very soon. So
encouraging stuff. Ayodeji Ajilore, investment research analyst with ARM Securities. Thank you so much for joining us to talk about the brewery sector.
It's a pleasure.
Appreciate your insight.